We're the backbone behind global business, and when they need capital, we fund it.
It's one of the world's largest alternative investment companies. Brookfield owns hydroelectric plants, cell phone towers, power lines, wind farms, ports, and even city skylines. Bruce Flatt has been at the helm for more than 2 decades, overseeing more than $900 billion of assets under management. The veteran chief executive is considered a visionary investor with a golden touch. But for him, it's all about patience and finding the right investments.
What you might think of as risky, to us it's not risky because we've been in this business these businesses for a long period of time.
In this episode of Leaders with Lacqua, I speak to Bruce Flatt about the secrets of his success, the outlook for commercial real estate, and his own future. Bruce Flatt, thank you so much for coming on Leaders.
How are you?
I'm great because I'm speaking to you. Brookfield has gone from like strength to strength. If I was a Martian meeting you for the first time, how would you describe your company?
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build. So it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
It's just because we're behind the scenes, but it's big with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
So you've been in charge for 22 years at Brookfield.
Yes, that seems like a long time when you say it that way.
2 decades, over 2 decades. What was the most interesting transition? I mean, you've grown the business by so much. What was the most difficult question about how to grow it?
Look, the amazing thing about this business is you're learning every day, and the world's changing all the time. But if I went back 22 years or 32 years, what we invested in then and now are very different. Data centers didn't exist then. Telecom towers were owned by all the phone companies. So these are things that the business evolves and the backbone evolves of the economy. So it's a really interesting business to be in because you're always learning.
But it's a difficult business because you don't want to be Kodak, right? You don't want to invest in something that goes nowhere.
Yeah, look, we're always trying to understand where is the future going and how do we invest with that. And often it's listening to your counterparties, your clients, your partners, and hearing what they're saying and what they want to do, and we're going with them. And that's really, we're the backbone behind global business, and when they need capital, we fund it.
And I think your North Star, as it were, is 3 Ds, right?
Yeah, look, I'd say over time, we're always trying to figure out, well, what are the things that are what are the themes
right.
that are going to drive the world? And today, the digitalization of everything, the decarbonization of everything, and the deglobalization of everything are 3, I'd say, mega trend themes that are going to be very dominant in investing for the next, not the next 2 or 3 years, the next 20 to 30 years.
Geopolitics is, I guess, taking a turn for the worse. How do you, again, keep that trajectory and saying, look, we will digitize, interest rates are also all over the place, so how do you stay the course, as it were?
You know, Francine, what we try to do is find good countries, go there and stay there, invest in these things, and whether governments come or go, or interest rates go up a little bit or down a little bit, aren't really relevant to these themes in the long term. You need to make sure you have liquidity, you can fund yourself, and you run good businesses, and that's more important than those general trends. So we're investing for 10, 20, 30, 40, 50 years.
So out of the 3 Ds, is digitalization the hardest because of AI, because we don't really know where we'll end up?
Look, I'd say digitalization was happening because of cloud computing, and the super tech companies getting into cloud computing, and that was the whole thing going on. The amount of things that go to your iPad every day today in your phone.
Crazy.
It's amazing what's happened in the past 20 years. But now with AI, it's almost exponentially taken it up. And so that's just another tailwind behind this whole sector. It was very strong before that. And for the last 5, 7, 10 years, we had been pushing into it. But the AI, what's going on with AI is even more dramatic. The digitalization of everything is being driven by data centers and just the connectivity of everything. But remember, everyone in the world has in some way committed to let's have less carbon.
Yeah.
And it's just transitioning the economy. It's not good or bad or green or black. It's just let's just transition the economy to have less carbon. So we're funding that, and the leaders in that today are the technology companies. So a lot of this is being driven by the technology companies to go green. So we're one of the largest builders of solar and wind and now batteries to be able to get carbon out of the system. And whereas years ago we sell power to the grid, today our power is mostly sold to global corporates.
But and again, this is you have to take a bet on what kind of technology. Or do you have to take a bet on just the infrastructure that supports it?
We were doing wind 15, 18, 20 years ago. We were doing solar 10 years ago, but very small. And only when the cost curves made solar and wind at the point where they're the most economic way to generate electricity. And at the point of that, if they're the most economic way to do it, and they have less carbon, they're going to win. And that's why we're decarbonizing today, because in most countries, this is the lowest cost energy.
But geopolitics must get in the way, right? Politicians have to be re-elected. They're pro climate change, against climate change. How do you not waver?
Remember, just the important point. In most countries, the lowest cost energy today for electricity is solar or wind. You don't need subsidies. And when you did need subsidies, politics mattered. Today you don't.
Deglobalization. So this is what bringing back onshoring.
All it is I think in COVID, I'd say it's always been happening. And in COVID, people just learned we should have production capacity located in many things located where you use them. So increasingly, for example, batteries for cars, for example. They're being used in America, and therefore there are battery plants getting built in America, and there's an enormous need for capital to fund battery plants. There's enormous need for semiconductors, an enormous need for manufacturing capacity in various locations around the world. And it's just natural that everyone doesn't want to have all of their manufacturing capacity in one country or place. Let's diversify. So that's just a big theme, which means it's just a lot of capital.
You make it sound very easy, but actually this has gotten you like more than 900 billion in assets under management.
It's not easy, but if you have operating people and you do repeatable things around the world, it gets easy. It gets simpler. It's not easy, but it's simpler. And I guess that's why we're in business, right? We've been doing this a long time. And everything's not the same, but there are a lot of things that rhyme, and therefore you can learn and continue to grow over time.
Coming up, Bruce Flatt on plans to invest in the financial backbone of the global economy.
We think that's the next phase of infrastructure investing.
Infrastructure has been a bright spot for Brookfield. The company is gathering cash for a new fund targeting buyout opportunities in the Middle East. And it plans to start a pool that invests in financial infrastructure, such as payment systems, as demand grows. I continue the conversation with Bruce Flatt. Did you know in 2002 that you wanted to be at 900 billion asset under management, or $1 trillion?
We're just trying to make money for our clients in a thoughtful way, and we've done that for a long period of time. And the reason why we are at the scale we are is because we've been thoughtful with their money and we've earned them a good return. And we've not taken a lot of risk. And if you can do that over long periods of time, you can compound their wealth, investment wealth, to very large sums of money. And that's what's important for these sovereign institutional pension investors, because they have very long durations. They need these type of assets to earn them returns over the longer term.
You've also gone to credit. How much are you expecting that to grow?
Look, what's happened with regulations in the banking system is they've just, it's pushed out credit off the balance sheets of the banks, and the right place where that is being funded from is institutional investors. And therefore, investors like ourselves are continuing to grow our businesses where we're funding these type of products. But it's not, our business is not in competition with the banks, it's actually in partnership with the banks. And as a result of that, I'd say it's facilitating the growth of the global financial markets, as opposed to something that often people talk about it that we're at the wrong time in the cycle or whatever it is. This is going to be growing and happening for a long period of time.
So how big do you expect?
It's going to get big, because remember, this is where most of the capital is in the world, is in sovereign institutional funds. These and pensions. These funds used to be 20 and 30 billion. Today they're 300 billion, 500 billion, $1 trillion and a half dollars. These are large sums of money. They need to put it to work, and therefore it's going to continue to grow for a long period of time.
And are you focused, when you look at regions, is it mainly the GCC countries?
We invest for people for the long term, try to earn them good returns by taking moderate risk, and if we can do that, it's all around the world. For you, what you want to do in your own portfolio is take moderate risk and earn a good return.
But Bruce, what's moderate risk? So again, you make it sound easy, but actually this is a know-how. So do you look into, you're also quite acquisitive.
Yeah, look, I would say we, in the businesses that we are in, we have more information than most people about what we do. Therefore, what you might think of as risky, to us it's not risky, because we've been in this business these businesses for a long period of time. We have the information of everything. We know what's getting shipped across the ocean in our containers. We know what's getting booked into the ports in different countries. We know what's traveling on the roads. We know how many people are going into a shopping mall. We know all of those things, and that just informs us. So we have, I'd say, better information to base our decisions than most people, and but we're always, we're trying to lower the risks by doing that. Of course, investing's tough. It's not easy, and therefore you're always taking some form of risk.
How do you choose what company to buy?
Thoughtful analysis about what's in the business, proper pricing. When things are up a lot, just wait. And most people invest at the wrong time because they get excited about what the markets are telling them about a business. And therefore that's usually when we're not investing, and just wait for the time when it'll be a little better to invest.
Do you expect, I think you've spoken in the past about, a possible big acquisition that would be transformational for Brookfield.
I would say we're always looking for additions to the business. In 2018, we brought Oaktree into our fold, and we have a partnership with the management there. That's been transformative to our credit business. And we're always looking for things like that to continue to build the business and just grow over time. But if not, we just keep plugging away every day.
So it's more partnerships than outright acquisitions, like Altera. This is a different kind of carbon fund.
Our transition business, we started, we split off from our main infrastructure business 4 or 5 years ago. We raised a large first-time fund. We just did a first close of our second fund for $10 billion. And then we started an emerging markets business. So I'd say that's just a split off.
Right.
This is just, all we're trying to do is we informed ourselves about transition,
Yeah.
We built a team over a long period of time. Now, some people said to us, can you solve emerging markets as opposed to just developed markets?
Right.
We didn't feel it appropriate to put the two in the same fund, so we're creating another fund to do that. And some of our clients will come along with us, and we're quite excited about it.
Is that a template for possible future kind of spin-offs?
You know, we have in our private equity business, we have a buyout sponsor business, but we're also doing, we're just in the midst of creating a strategy for the Middle East, which will be a separate pool of money. We're creating a strategy for financial infrastructure because we think that's the next phase of infrastructure investing is in the financial backbone of the global economy. And a lot of the world has been pushing towards financial infrastructure, and it's not appropriate for our infrastructure fund.
Right.
But so we're creating a new pool of money to do that. And so there's a fine line between having too many things and making sure your clients who want to be invested with you in that type of area have a pool to be able to do it with us.
Bruce, when you look at infrastructure, I mean, consolidation. It was really the name for the last 6 months. Does that make your job easier or tougher?
Look, we were the maybe one. I'm going to say one of the pioneers of infrastructure.
Original, you want to say?
Well, going into institutional clients, we were the original because we were in industrial businesses ourselves. And how we got into the infrastructure businesses, we decided we didn't like the up and down of many of the industrial businesses we had and mining businesses, but we really liked the backbone infrastructure that was in these businesses. And but 20 years ago, we started doing it for institutional clients. At that time, nobody would listen to us and nobody would invest with us. So it's great that that this has become mainstream today. The good news, I'd say, we're still a leader in it. We have very large funds, in fact, the largest in the world, and therefore we just continue to try to differentiate our investment strategies and with size, scale, operating people, and the ability just to grow in the places we are. So I think we're, do others getting stronger help us? Probably not, but it doesn't really bother us, and I think there's a place for us to continue to grow in the business.
Coming up, why Bruce Flatt has faith in the future of commercial real estate.
There's opportunity coming, and if you know what you're doing, you can pick the right assets. There's a great opportunity here.
From the United States to Europe, plunging office valuations are spooking investors, raising fears about a broader contagion. As one of the world's biggest owners of commercial real estate, Brookfield is at the center of a global industry shakeout. But the chief executive, Bruce Flatt, who made his name in real estate, sees opportunities where others see risks. We continue the conversation. Commercial real estate.
So a lot of people say, look, this is not the right time. We're going to see a shakeout in commercial real estate. There are opportunities that you see.
Yeah, I think, look, the next story is that interest rates are coming down. Fundamentals are pretty good in a lot of commercial real estate. Of course, there's a tail of some investors that had properties that for this environment, the fundamentals either don't support it or the financing they have can't be supported, and therefore those have to get dealt with. So that's a tail that's getting dealt with within the financial system. Fundamentals are actually getting better. Interest rates are coming down, which means the values are going to improve. But that tail, there's opportunity coming. And if you know what you're doing, you can pick the right assets. There's a great opportunity here, and we've done this for a long period of time, and we've seen these cycles before. Real estate's cyclical, and you can make a lot of money when you pick the inflection point of markets. And I remember it in the early 90s I remembered it in early 2000s. I remembered it in 2009, 10, 11, 12. There are points when there's an inflection point,
Yeah.
and we're at one of those inflection points today.
So you're buying.
We are buying. Our opportunistic fund, we just bought we foreclosed on some loans for multifamily in the U.S. recently. We're very excited about that, and we continue to look at a bunch of things.
Do you see anything in Europe?
Absolutely. I think there'll be, the biggest, most liquid markets are in the United States. Mm-hmm. That doesn't mean, therefore, because they're the most liquid, you always find the most opportunities. But Europe, there's less capital, and therefore there will be opportunities here as well.
But how do you make a difference between the ones that will get better and the ones that actually you should forget?
I would just say it depends on the types of real estate. You just need to, quality wins always. It always has. It always will.
What do you spend most of your time thinking about?
I personally spend my time sometimes helping our teams with business. Sometimes, say a third of that, a third with clients, helping them understand what we're doing, where we're going. And a third is just internal people running the organization, I'll call it. And with that, we spend an enormous amount of time building our people and transitioning our people within all of our businesses. And it's just this is not something that happens once. It's happening all the time. And our whole goal is, our culture of our place is, bring people up that are very young, give them opportunities that they'd never get anywhere else, grow them throughout the organization, make sure they're entrepreneurial, hardworking, and want to win. And if you have that, you have a great culture in a company, and that's sort of what we spend a huge amount of our time trying to build within the organization.
But bring them up to test them, or just to make them learn?
Look, if we can bring them up to take on roles, and eventually I will become an executive chairman. And I'll still be around, but somebody else can be running the place.
Will you ever retire?
Well, I will become an executive chairman at some point in time, and what that means is I'm here to help mentor young people, help with business development, look after clients that can be helpful to the overall organization. But at some point in time, this is a hard business. We're in 30 countries. We have lots of people. It's better to have younger people grow the business. I took over at in my early 30s, and I probably slower today than I was then. Not that I've slowed down, but I'm slower today. And at some point in time, it's the right thing just to give the people those roles. And so we're continually evolving the organization in that way.
But are you going anywhere anytime soon?
No.
Bruce, is this the biggest mistake actually for politicians and chief executives? Is staying on for too long, or is it is leadership in 2024 different to what it was in early 2000s?
I think it all depends on the organization. Some organizations fit one way, some fit another. I'm not suggesting our culture is what works for everybody else, but we have a culture where our elders stay around for long periods of time to help. And our young people get opportunities which they wouldn't otherwise get if the elders stayed in place in a full-time role. And that's what we do, but maybe it doesn't work for everyone, and that's okay.
Bruce Flatt, thank you so much for joining us today.